Good morning, ladies and gentlemen, and welcome to the Governance Now Roundtable. The recently unveiled Pitch Madison Advertising Report 2023 has projected advertising expenditure ADEX to grow by 16% in 2023. Similarly, Group M's This Year, Next Year 2023 and Dentsu E4M 2023 report have made similar projections. For the first time, ADEX is projected to cross the rupees 1 lakh crore mark. The growth in digital advertising is accounting for the maximum growth in the overall ADEX. It is also a matter of immense pride that India ranks 8th globally on ad spends and continues to be the fastest growing market in 2023. India's ADEX is expected to grow at 16%, which is 5x more than the global ADEX, which is expected to grow at 3%. All these projects are very robust, healthy, and a rosy picture. But post-October 2022, the industry surprisingly witnessed a slowdown of nearly between 20 to 30%. Ad volumes across traditional media such as TV and print have seen major degrowth, and the poster boy of ADEX, digital, also saw some softness. Thus, it becomes all the more necessary to discuss the reason or the factors which are behind the current trends in advertising. On one hand, while we are highly optimistic of the future, and on the other, we are witnessing a slowdown. Today, with great pleasure, I am being joined by industry stalwarts on this roundtable. I would like to introduce them. Firstly, Mr. Shashi Sinha, CEO, IPG Mediabrands India. Thank you so much, sir, for joining us.
Thank you very much for inviting me.
Mr. Vikram Sakhuja, Group CEO, Madison Media and OH, Madison World. Thank you so much, sir.
Wonderful to be here.
And Mr. Avinash Pandey, CEO, ABP Network Private Limited. Thank you so much, sir, for joining us.
Thank you. Thanks for calling me up.
So my first question, gentlemen, to all of you all is that, as I mentioned in the beginning, that there is some softness after October and a good amount of softness. I'd like to understand, what are the factors which have driven this sudden downturn in ADEX? Shashi, sir?
So there are 2-3 factors. One is, all the digital companies, digital spenders, so to speak, they're all, because of valuation reasons, as they said, the funding winter is here. So obviously, a lot of them, they're growing their business, that's all stalled. That's all, all the big companies, I don't name them, but all the big boys, that's one. Secondly, the other big sector, which leads for us, auto. Now, auto even now has been plagued by, auto had over the last 4 or 5 years turned around launches. And auto is, to a great extent, supply driven. The chips are still in shortage. People, for a variety of reasons, auto spends have come down. And finally, the bread and butter of our business is CPG. And CPG did all right. They went through a rough patch in terms of inflation, as a result of which margin pressures came, and therefore the first thing they cut is advertising. They seem to be coming back, but I'm not sure they're back fully. So I think these 3 factors put together are the key reasons why you see a bit of a softness in the entire ADEX.
Sure. Vikram, sir, your thoughts on the same?
No, I completely ditto everything that Shashi said. I think to some extent, I think the bottom end of the economy, so especially the rural and towards the rural areas, we hear that there has been some kind of a money squeeze out there. So some of those sectors which were earlier, because at some point in time, the lower end of the economy was really fueling a lot of growth during the COVID period, but now that seems to have also slowed down a bit. So in addition to what Shashi said, that's another slowdown area. The tailwinds are that, at least for the CPG guys, the inflation, which was a big factor in 2021, sort of got more controlled in 2022. And hopefully even in 23, inflation will be a lesser of an issue. So that is something to cheer about. But these other ones are the headwinds.
Sure. Avinash, sir,
the other one on that one also is, from an overall standpoint, government spending, which otherwise is a very big factor, that has slowed down a lot for whatever reasons in 22.
Sure. Avinash, sir, you are, heading a legacy media brand that's about 100 years old. And I believe that broadcast is a key factor, a growth driver or a number churning in the entire group. What do you feel has happened, post-October? Because there is softness in the news channels advertising also. I mean, we have seen a visible drop across the genre in terms of ad volumes as well.
So I completely agree with what my 2 colleagues have already said on the panel. But I think the 2 things have happened. And what we need to watch for is based on these 2 incidences. Number one, the input cost of all the companies was continuously rising. Beyond a point, you do not have the price elasticity to demand from the consumer. That growth in the input cost has stabilized. It has not started going down. And that is why you see the decline in the advertising overall volume by different client is not further. It is stable at that level is what is my understanding. The second one is that what Vikram and Shashi ji rightly pointed out is that the recession in the US economy and the European economy and the rest of the world has led to complete summer of the funding. So right now the companies which were dependent on volume by the what you raise the capital and all that, etc., has gone down completely. Now, if these two factors continue, which is that the prices of the inputs are not going down, people's incomes are not going to go up anyway, and the recession in the US economy continues, I am little suspicious that in the near term, which is about next 2 or 3 months, advertising is going to go up. One of the very serious factor, in India, we say that there is an India and there is a Bharat, right? Bharat economy, I'll tell you, we are seeing a lot of positive signs. And I say Bharat economy are particularly the clients who procure within 100 to 200 kilometer and sell largely in 200, 300 kilometer, So their business has been little robust than what the companies which are impacted by the global slowdown. And they are the one who are actually largely advertising in the news medium, as you may see. One of the interesting factor in the advertising business, what I see is that look at it, we are talking about CPG not coming back and all that. Look at the number of houses getting sold. When you buy a house, you buy everything new, right? Indian economy runs on two things, marriages, festivals, and all these two things lead to buying in housing, right? When you buy a house, you buy everything that is related in the house. But surprisingly, these companies which are the contributing factor for the growth of the housing are not advertising. There is a housing scheme announced, next day there are no flats available. This is something contradictions I have not been able to understand it fully.
Sure. So do you feel that, maybe companies or are feeling that माल तो बिक ही रहा है तो ऐड करके फायदा क्या है? मतलब do you all this is to all three of you all कि एक ये sentiment might be coming in कि as you pointed out that a housing scheme is announced and रातों रात flats are sold. So माल तो बिक ही रहा है ना, ऐड करके करेंगे क्या? Shashi sir?
That's not true across the board. That's true of certain categories, like I called out, automobiles definitely, because there is full potential of supply is not there. At one point in time, last year, it was for handsets, top-end handsets. It's now easily available. But that's not true of CPG. I think CPG, which is the bread and butter of advertising, is a point which Vikram made, that bit of a slowness in the rural demand. I mean, we all hear that. Input costs, as Avinash very correctly pointed out, input cost inflation is under control, but then when it's come down. So I think margins are under pressure. So I think that point which you called out, I don't think applies. Probably what Avinash is alluding to is the top end. Top end it's almost insensitive to inelastic to inflation. So as a result, housing and all that is happening there. But I think there is stress. There is a middle level stress which is there, which is a companies not to take pricing beyond a certain point. So this is my perspective.
Sure. And since we all mentioned about FMCGs are like the bread and butter of the entire industry, and they have been witnessing recession impact on their business. Discretionary spends have been down, and this is widely reported into the media. Grocery purchases for a few quarters were impacted. Now, there are little green shoots in that, but they have been impacted more so in the thriving rural market, as Bharat Avinash sir mentioned. Now, India is considered as a bright spot in the gloomy looking world scenario everywhere. So when do we see this cooling off? Like when do we feel that consumers will get back in their mojo, Vikram sir?
No, I'm sorry, I'm not sure I got your question. You said that India is considered to be the bright spot in the global scenario. So you said when's it going to stop, or when's it going to?
No, the inflationary impact, and when do we see the discretionary spends go up by the consumers, which was down?
Look, if I have to look at, I've always found it difficult to sort of to reconcile macroeconomic trends with microeconomics. I know it is happening at some level, but a large number of our clients, they are able to, they're growing, in some cases, have pretty healthy double-digit growths also in CPG as well. And then there are some which are maybe high single-digit growths. So, and there is volume growth and there's a value growth. Growth is happening in both volume and value. From category to category, sometimes top end is sort of driving it, and in some cases, even volume is driving it. So at this point in time, I really don't know whether there is a low sentiment in spending. Now, my good friend Shashi on this sent me a very interesting forward yesterday, and this is Alan Greenspan's underwear index, where apparently it says that because underwears are something which people don't really, it's not really visible to the external world, that is something which is a sign or a lead indicator of when things are going to look better. And I think there is a lot of merit in that kind of an argument. To that end, I would say, yes, the hosiery market has taken some kind of a beating in O&D and maybe JFM also. So maybe there is some truth to that. But a large number of the other ones, whether it is food, cosmetics, personal care, home care, the growth is pretty good, especially food. But I think some of the ones, I think maybe the not the opposite of green shoots is maybe this underwear kind of thing.
Sure. Avinash sir, you mentioned about India and Bharat. And Bharat actually drives the entire economy. MSMEs, I mean, they are a key backbone factor. When do you see that the entire sentiment picking up across the board?
See, first of all, Shashi, you are morally obliged not to share that spin underwear theory with both me and
Right away.
Second one, see, so I have a theory about this based on my reading and understanding of the current economic situation. See, for the first time in last 50 to 70 years that we know of, okay, globalization is looking like is ending. This is a very new world that we are seeing right now, more inward looking, right? Which has led to very high inflation, okay, because of the war, because of the whatever the crisis that we are seeing. This is not going to reverse soon, right? When such a high inflation happens, what many companies or all companies do, cut down on advertising, because that's the expense that you can do away for a small period. Now, what companies are doing is that they are going into the performance marketing and all that, and we have a digital business where we are clearly saying there is a spike in those areas, including events, communication, branded content, and all that has got spiked because these are all performance marketing. Now, companies are selling what Vikram is saying and what Sarish. Companies are selling products. It's not that the sales have gone down. It's just that the advertising has gone down because that's a discretionary spend. This will go up across companies once this, what Shashi rightly pointed out, that it is stable inflation, but it has not started going down. The moment it starts going down a bit, you will see a spike in advertising, which we think it will take another 3 to 4 months as per my understanding, for us to get stabilized. MSMEs, on the other hand, deals with a very different kind of India, where there is despite the internet penetrations and e-commerce penetrations, there largely is the cash transactions. So the cycle of capital is not that large, that maal aaj bech rahe hain, paisa 60 din 70 din baad aa raha hai. वैसा है नहीं उनके साथ, so they are far better positioned to advertise and reach out to people than what we are. Last one that I'm seeing right now is that rural economy was really down, and now it is showing spike. And rural economy, again, I see, Shashi ji, through the advertising of underwear banyans, it has again gone up, and I mean, these companies will tell you that their 60-70% consumption happens in Bihar, UP, Odisha, rural India, and that means that there is a spike that is happening there. So I think we should be back in business in next 2 to 3 months is my assumption.
Sure. And these, as the clients that you mentioned about the underwear banyans or even the coaching classes, they are very peculiar news clients. I mean, they don't venture out, but they are the thriving business for at least the news genre, and that too for the mainstream Hindi news genre. Now, since we spoke about, the e-commerce company and the tech companies, like they are a good chunk of the entire advertising spends. When they came and their spendings were huge, and now they are in a fix where big amount of layoffs are happening, like thousands and thousands of layoffs are happening because of funding winter and various other reasons. Do we see them coming back in the near future, or will their cautious approach, the kind of approach that they have today, is now a thing for the future? Because see, for them, they are only riding on that, okay, our GMVs are increasing, our sales are increasing, so we get the funding. They are currently in red, even though if they are listed, they are currently in red. I mean, the body is not producing its own blood. It is on external support. So do we see them coming back anytime soon, or for them, it is a little difficult stand? What do you feel, Vikram sir?
No, I don't think the the funding winter is going to continue for a while. When I speak to all the private equity guys, they all sort of unanimously say that it's going to be very cautious. Look, personally, I've always been a P&L man. I've never understood the valuation game. So according to me, I have zero understanding of how people can just keep on doing GMV. That's vanity, according to me. But obviously, many of them have had very good exits, made tons of money. So they are laughing the way to the bank. I'm just a simple P&L kind of guy who's doing it this hard way. But I think that's also the enduring way. So somewhere I feel that these bubbles will burst, and you aren't going to hear very positive things from me, at least, about growing the valuation way. So I'm actually quite happy that there is a investing winter, and at least now people are being forced to show sort of some profitable businesses, and only then the money will come in. So I think that's a welcome sign. Otherwise, you'd have just had another bubble which would have burst and taken a whole lot of people with them.
Writing on valuations, it's like subah itna dala, subah 100 rupiya dala, sham ko 110 nikalna chahiye. It's very simple. Shashi sir, your thoughts?
So adding to what Vikram just said, it's not only, I make a larger point, which has got nothing to, in addition to what Vikram said on the digital companies and the e-com companies as he called out. See, the larger point is the global economy is under pressure just now. Yeah. US is almost wishing itself into a recession, though it may not get into a recession, who knows. But global companies, whichever sector they are, whether they're private equity fellows or whether the CPG companies or the big giants, whichever they are, the Amazons of the world, they'll all, the Googles of the world, they'll all be cautious in spending. Don't forget that Google, while they get a lot of money, they also are spenders. So all of them. So, they will be cautious, and India was in the growth market. They say, listen, if our parent is under pressure, both from a P&L and the optics reason, both, you can't be going overboard, So 70% P&L, 30% optics. So I think there will be, without naming names, finally a lot of global companies spend, even the CPG space, they get money to invest, that will slow down. So I am slightly less optimistic as some of my colleagues that it will take 2-3 months. It may be slightly longer. It depends on what happens in US, what happens on the war. I think that will have a big bearing on what the outcome is going to be. Otherwise, my prognosis, and I hate to say it, maybe slightly longer. This mess will last longer.
Sure. I remember watching an interview of Avinash sir. It was about a founder of a very big tech company. He had made what is your revenue? He's like, and he tried to dodge the question, a couple of times. Finally, he asked a point blank on national television, how much do you earn? What is your revenue model? And, finally, he gave up. That founder, he's a very successful founder. And he's like, my investors are not focused on revenue. We are not a revenue focused company. We just want to grow our numbers. And the journalist who was interviewing was a senior journalist. And he's like, what logic are you giving me that, no, we are not focused on revenue? That company is valued at $3 billion. And then I found out through ROC and other available sources, the revenue is 30 lakhs. The top line of that company is 30 lakhs and it's valued at $3 billion.
Oh.
Avinash, sir?
See, as Vikram said, we are a small business. We put in our own money and we would like to make some profit and we would like to fulfill our purpose profitably, right, of doing the business. These capitalism, what famously one of my ex-boss told me that these are a spreadsheet capitalism. A lot of media companies we have seen which believed in this spreadsheet business either does not exist anymore or those owners have been forced to sell off their companies at a far cheaper price than they could have got otherwise. So I don't think so it works in the long run. But we are talking about advertising. For us, we have seen this in last 20 years. I can tell you such windfall every once in 2 years or 3 years. Somebody comes with a lot of money. We don't know from where he has got the money. Thankfully, we are a very robust system of IBF 0005. These two gentlemen have chaired it at different point of time. Vikram is chairing it. We have a robust system of getting the money on time. So,
true. You're blessed that way.
And I believe that, look, if the government of India has given license to anyone to manufacture, he or she should have a right to advertise. We are not in a business to know their spreadsheet health, right? No way we can determine it, right? We are not Wall Street bankers, right? That's somebody else's job. Our job is that if they come with the money and we think that the business is not very sound, we should take money in advance and let them advertise. I don't know what happens to their business next. But yes, these companies come and they spike our ADX and they say, oh, the country is doing good. And then they go over, they say, what happened to us? So that is quite frequently actually happening, these bubblets burst. One point that I would like to add, which what Vikram also said, this year, I think, would be the year of the real businesses. So FMCGs will grow. You will have telecom with the 5G growing. Media companies advertising will grow because they will have to fight for their share in the content pie. You will have a growth which was very subdued at the automobile, two-wheeler, and a small car level, because it has been, you cannot sell these products without advertising. They have to advertise. So I think they will come and grow. And more foreign investments in the real manufacturing sector will happen in India, which will lead to a growth in a lot of advertising of the real products in India this year. This is what I see the future of this year in India, and not of these bubblets which are bursting since last 6 months.
Sure. Now let's talk about digital. I mean, digital ADX is like a double engine growth sarkar when it comes to the overall ADX. But in terms of, composition, it's majorly between Meta and Google. I mean, the entire digital ADX, like a good amount of majority. Do we foresee, Shashi sir, that in the coming time, this composition to change, or will these both tech media giants only continue to take a lion's share of the digital advertising?
Well, 2-3 comments I want to make before I answer your question. One is digital, it's a bit of a black box because I don't know how we measure digital. Digital is brand advertising, display advertising, which is part of the same pie. So if that pie is not growing, how can digital grow? Share may change, but it's not growing as dramatically as it ought to be. Performance, as Avinash called out in some of the context, definitely is growing. I don't know the huge amount of MSME there. So I don't know where that will go. I think to answer your specific question, I think there will be a time will come, now whether it's 2 years or 1 year or 5 years, I don't know, when the market will open up. And I hope and pray it opens up. For any industry, a duopoly is not good, for a variety of reasons. So I think it will open up there, many, the Indian publishers, a lot of Indian companies, I hope and pray that they succeed for the sake of this country, not only for our sake. So, and I think as Avinash called out, there is I'm a firm believer, there is a very strong opportunity in MSME. And if you ask my view, that, traditional media, when they do the digital play, so Avinash's company from print has evolved to TV and not strong digital play. There are many such people, the Bhaskars, the Jagrans of the world. They will make a play, and that play will be successful because they know as India, just now it's all coming from large companies. As MSME grows, that's when the growth will come, and automatically you'll see the duopoly breaking up.
Absolutely. Vikram sir, your thoughts on the same?
So the digital juggernaut, I think, is driven by a few things, and I'll come to your big versus small thing. there is, you can break it up into 2-3 areas. There's performance. Now, performance money has really come to some extent from erstwhile BTL in some cases. So especially the e-commerce versus the whatever used to go into BTL trade related stuff, that is part of that budget. So it's now coming into the ADX. So you're counting it in ATL, but frankly, it's money which has really come from BTL to ATL, and that is all in the performance area. New money that is coming is really social. The entire social media, influencers, content, all of that piece is really coming as possibly new money. The other one, which is branding, like Shashi also said, it's being redistributed between maybe TV, print, and digital, and these are the 3 big ones. Now, that is where I see that currently there has been the digital emphasis has really been on performance, maybe at the cost of branding. Now, I think there has to be a little bit more branding focus also being given. If the branding focus is given, then I think it'll continue to grow, and that will be a very interesting way, because I think you might get, I think brand building will get mined much better than it is currently is at this point in time. There are not enough conversations happening on integrated marketing between TV and digital. So I think that will happen. If you have to just look at total video today, we projected about 30,000 crores of TV advertising and 10,000 crores of video advertising. So today, 25% of total videos on digital. Now, as we go in the more integrated setup, let's see how that pans out. There'll be a role for both, but that'll be an interesting one.
Sure.
The second point is between the big guys and the small guys. So again, I think if we can move to more and more industry-led cross-media studies, if we can get into a scenario where you can read the entire digital ecosystem, and not just through, like, for example, one of the 2 large giants that you're talking about is a complete walled garden. So now, if you are able to get more open about it, it will definitely make it more democratic. And if you have an industry body which is driving audience measurement in digital, it's going to get more democratic. You'll have more players coming into the fray.
Absolutely. And Avinash, I wanted to ask this question also, subsequent to this, that in case of traditional media, we have a formal measurement system, and in case of digital, we lack that formal measurement system. But still, brands feel, and this I've seen across various industry forums or in reports, that spending money on digital is the only way they feel that they can achieve targeted advertising, driving ROI. Do we see a counterpart of it coming in, of it in the coming days, or this notion will just continue that if you want a geo-targeted advertising, digital is the only way, how to achieve that in traditional media?
See, there are various ways to geo-target it. Digital is not the only medium. So first of all, you have outdoor, you have radio, you have now cables, local cables giving advertising space. So it's not like, you can have only digital as well. Second one is that look, television, print and outdoor, it still delivers. You talk to any advertiser and they'll tell you when we advertise, our products get sold. Digital is still very opaque. You are not certain whether people have actually seen the ad, watched it, and it is likely to giving a behavior of what a traditional brand building exercise can deliver on other medium. Digital is not doing that. Digital is largely based on search, discovery, and probably targeted, performance-based marketing, that you end up buying something. The problem here is in the whole ecosystem. The ecosystem is such that the television, newspaper, and outdoor, a client goes to a particular medium to get to its consumer, because those consumers are coming only to watch that. In digital, you are not choosing that particular medium. You are just choosing an age group, a TG, and a geography, and a something. That ad is appearing on a Noida-based, some garage-based guy who is producing a video giving gyan on the world economy, or an economist video, right? Now, the advertising business, which we all studied under Shashi ji, is that medium is the message, right? But here the medium has become defunct. And that is, I think, more dangerous point for products and services, because they have to be very careful. And the platform operators, of course, walk away with the maximum amount of money. We get a small change. That system needs to be balanced out. That is an urgent need. Otherwise, it is not only bad for businesses, but it's bad for democracy, I can tell you.
Sure. My question would be to Shashi sir and Vikram sir. Like, since we deal in the business of brands and you all are with brands continuously. Traditional media is still seeing a strong single-digit growth, as now cemented by Avinash sir as well. But do you feel that brands are still bullish on TV or print to create an impact for their campaign, Shashi sir?
Definitely. I'm personally a big believer of what you are calling traditional media, printed TV. I mean, this classification is a misnomer, but I think nothing can give you impact and reach and many other factors, there. Kailash, with your permission, I want to go back to a very interesting point you have made, and Avinash gave a beautiful answer. I thought that previous question, sometimes both Vikram and me and Avinash, of course, in various capacities do industry jobs. And sometimes I wonder, are we doing disservice to the industry by having third-party measurement for TV and print, while we don't have anything in no third-party measurement in digital? Yeah. And to layer to that is the wonderful point which Avinash made, and with your permission, I want to dwell on that.
Sure.
It is a very big point on, platforms versus content providers, and what is good for business and what is good for democracy, and both are intertwined. You cannot have a situation what is not good for democracy will be good for business. It has to be intertwined, I think there is merit in building on that point. I mean, if you could probably do a separate session. I'm pretty vocal on that, and I know Vikram also is vocal, that, it's come to a situation where a lot of people, publishers and content owners are saying privately, does the third-party measurement work for us? Is it enabling us or is it taking away from us? I mean, look at people who organizations which don't have third-party measurement are growing rapidly. So I think there is dramatic need to course correct this, because, without making it so simple that it's fashionable to get into digital, therefore a lot of people put money into digital. I'll give you a counter without taking names. We were doing a pitch 10 days back to a very large, very large successful fashion online brand, or a personal care brand rather. And the owner, not the CEO, the owner turned around and said, we have seen that, we do a lot of stuff on performance, we do a lot of stuff on digital, but finally performance works for us when we are going to our cohorts, people who have bought from us, and we are telling to buy more. But if I have to get new users, to me, nothing like television. And I'm quoting, So I think there is also, as an industry, a fair degree of, evangelizing needs to be done, because we don't want this industry going to the other side, that wherever there is third party, just stop that because digital don't have. So I think there's a very, and I'm not grateful to you making that big point. And intertwined with that is the fabric of democracy, which he spoke about, which I'm sure you, Kailash, you understood what he was trying to say. So
absolutely. Yes.
Sorry for digressing.
I
think I'll call it out.
Sure.
Sorry, if I may add to that.
Yes.
I definitely also echo Shashi's point that TV and print are very, very valuable, and they are being they're of immense value to advertisers, no question about it. The point I'm making is that it's not that digital advertising is meaningless, but I think what we should be also doing is the building blocks of media, which we learned through TV and print media planning, it should be actually extended to digital. Digital seems to be talking in a lexicon and a vocabulary of its own, which is too silly. End of day, I'll tell you what I'm saying. In TV, if people say that digital is a black hole, I put my spots there, nobody sees it, we get this all the time. And obviously, whenever anybody puts something on TV, everybody says that everybody saw it, and it somehow seems to be working harder. It's not that. So how do you sort of resolve that so-called, it seems pretty odd, right? To me, it's very simple. End of day, we've always, in TV, used to buy spots, which used to give you ratings, which used to give you GRPs, which was decomposed into reach and frequency. Now, for some reason in digital, we are only talking impressions, and impressions is just another form of GRPs. but nobody's converting that into GRPs. It's a 2-minute job, but they're not. They're not. At best, if you ask them for reach, they give you unique reach in terms of millions, but they will not give you percentage reach. They'll give you average OTS. They won't give you effective frequency.
On
Now,
their own data,
the thing-
Vikram, on their own data. There's no
On their
third
own
party
data.
on their own data.
Own data. They make
Look, I'm
compass
right
their own
now,
data.
I don't want on their own data is a different issue, but I'm just saying, and I think that's a point. But the minute you start taking and say that I'm reaching X% of the people so many times, you will find that both of them will be working, digital and video. A lot of people on online video are not using online video with threshold levels. The big problem on digital video is that it's got a much longer tail than TV. So to build reach or high frequency is very difficult on digital. This is compounded by the fact that Avinash earlier made that when you're going and just chasing audiences on digital, it's agnostic of the content. Like he's saying, it could be on a Noida-based armchair economist versus a global economist. Now, somewhere, if you look at global ad ratings, wherever the people are markets which have moved to digital ad ratings, there are two things being measured. There's advertising being measured and content being measured. No market in the world today is actually measuring advertising in the context of certain content. They're hopefully moving into that. That is what TV is, right? And long time back in ACOM, when it started, the big debate and the largest digital sort of media owner and the largest TV owner, they came to loggerheads at that point in time because one was insisting on ad ratings along with content ratings, and the other said only ad ratings and no content ratings. So that was a loggerhead 5 years back. 5 years later, we are seen in a situation where Globe is moving to actually capturing both of these and hopefully reaching there. But even right now, no country has it. So I'm reinforcing Avinash's point earlier. I'm a total proponent of saying that as an advertiser, I should be completely entitled to know in which content my ad is being placed. Whether it's important or not is still, I mean, there are some people who will say, I don't care how I get my reach and frequency so long I get it. And there'll be other people who believe that the environment in which the ad is being placed matters. So at least the option should be made available to advertisers.
Sure. Avinash sir, and since you are helming a news behemoth brand, a lot has been talked about in the past 6 to 7 months about the relevance of news on television. इसलिए कि लोग डिजिटल पे पढ़ लेते हैं ना, न्यूज़ टीवी चालू करने की क्या जरूरत है? Although I mean the viewership is there, the ratings is there, but that debate on कि अब क्या मतलब है, कौन चालू करेगा न्यूज़ चैनल on TV? I'm putting it very frankly because I want your views on it. And I firmly believe that news on TV has relevance and will always hold relevance. But what are your thoughts on the same? And also from the brand perspective, like from the advertising perspective.
ये एक ऐसा सवाल है जिसको मैं 1 घंटे बोल सकता हूँ. तो हमारे पास समय की कमी. I think we've already crossed the time.
Yes.
See, it's absolutely unfounded that people are not watching TV. Number one. Rather, they are consuming more. If there more and more TV sets are sold in India, what are they doing it for? Putting a painting on that. Obviously, they're watching TV, right? That the signal delivery medium is changing. We have to understand that. But they're watching TV and they're watching most of the time live. Okay. Even today, the live watched of any GEC content, and I'm defending on them, they are not here right now, or the news content is far higher than what is being watched on the VOD.
Yes.
Having said that, currently there are a lot of things that people are consuming, getting the news on Twitter, Facebook, and etc. and all that. I consider these as enabler, because if Manish Sisodia is getting arrested, I can know now in the car, right, on my mobile. But once I reach my home, I'll be watching in the big screen on TV. So it is enabling more people to come on TV and watch news. So there are two things happening. One is that instead of fearing that system, the media owners should actually invent the content in a way which is recognizing that the social media or the search media is an enabler and letting people come to watch the TV. Then you have to create the content so dynamic so that it is interesting for them. The second one is that it is also leading to more number of people watching TV, which currently I have a quarrel that it is not being correctly reflected in the data. But more and more people are watching TV and more people are consuming news on TV. The clear-cut example is the political spectrum that you see. In fact, there is hardly any state government or political party which is not advertising very heavily on news television. And why? They are the one who are in touch with their voters on a daily basis. They know what they are consuming. So we need to, as news broadcasters, we all need to get together to create more engaging content. Because there is a set of content which is absolutely not, I will also say this, not available on the mainline medium, and thus people are going on the digital to consume that. The content has to have a mix of that, which we need to invest on. But at the same time, TV is still being watched more and more. Rather, it is being watched more than what it was earlier.
True.
If may I add a perspective?
Sure, sir.
Look, there are other aspect of TV news which I think is irreplaceable, is the anchor. Because if I have to go back to history of news, I'm talking about 30, 35, 40 years back. It's an American context, but the Walter Cronkite was he was a guy who defined news. And in fact, when he sort of retired, Dan Rather came in his place. And Dan Rather, they said, who's going to fill his shoes? And actually, Dan Rather did that pretty admirably. But the point is that news has when people are listening to news, they're looking for insight and credibility and gravitas. And it requires a certain person to deliver it. If I am delivering news or a Walter Cronkite, or for that matter, look, every Sunday night or Monday morning when Fareed Zakaria comes with his GPS, I try to make it a point to hear what happened in the week gone by. Why is that? Because somewhere I am actually listening to the guy who's speaking, and the platform that he's chosen is TV. So I actually think the anchor has a big role to play in all of this. And somewhere I think if I want to extend this, I've always believed, I think it's time for newspapers to also make heroes out of their editors.
True. And this, I echo the point of anchors, because I know in my house, like right from 9 p.m, if dad is at home and only news television is seen for the next 2 hours. I mean, that's because he's like, news on TV is where I get to see all kind of views. I mean, there is a one side of view, other side of view, and I can see that prime time news still has a lot of relevance, and I personally believe that it will again have a lot of relevance. Now, my last question, gentlemen, since we have run out of time, a hot topic of discussion is connected TVs. Currently at 10 million, projected that it will reach at 40 million. But looking at the Indian landscape, the infrastructure, the capacity built up for a smart TV, the kind of bandwidth that you require, do we believe that in the next probably maximum 3 to 4 years, this connected TV will replace completely your linear cable television? Shashi sir?
Again, like Avinash was talking in news, this is a favorite topic. See, as Avinash alluded to earlier, this is a form of supply. It's got nothing. Finally, people watch content, correct? So I'm not getting to data prices and all that, what you alluded to. The larger point is today, because of TV, the measurement has in a way hurt television, that we are looking for lowest common denominator. So lowest common denominator, we do the Anupamas of the world, which is for a particular audience, and therefore the top end audience is lost. And they pick up whatever they pick up, which is why the general OTT. Now, if we were to provide an option for them to leverage those audiences, the same guys will do content. So today, my point is that people like Avinash or the Z's or the stars of the world will be the future of content. Whether they do it on TV or they do it on digital, they have to just segment the content. Correct? So connected TV is a mechanism. It's just a way. Whether it goes or not depends on data prices, depends on how fixed wireless goes. All that's a separate discussion. Finally, you will watch that game of IPL on the big screen. You will watch news on the big screen. Correct? So if I am enabling content and enabling monetization of content through measurement. So if I say, listen, for those 20, 25, 30 million homes, they want a particular kind of content, and I enable measurement and I enable gets monetized, then so it's got nothing to do with connected on linear TV. The content we segmented just now, there's no content segmentation we are allowing. I don't know if I'm articulating my point well, but if that's the future is there. So you have to allow monetization of multiple content. The big guys, the guys who are linear TV, the only ones who make profit and the only ones who invest that.
Sure. Vikram, sir, your thoughts on connected TV?
I think connected TV will grow. And I think the streaming as a way of consuming TV will definitely grow, but linear TV will also continue to coexist. The data infrastructure, even though it's growing by leaps and bounds, still means that if a person's paying whatever they are for cable for unlimited, for whatever 300-400 rupees, they're getting the entire, all the content for the full month. They will be takers for that. But without doubt, especially this is going to be a top-down effect, but definitely the more affluent homes will increasingly move towards a connected TV and using streaming as a way to view channels.
Sure. Avinash, sir, your thoughts?
Still a process, but it's obviously right now it's a minority, but it'll grow.
I agree with Vikram. It is going to grow. However, consider, I do not know, about 24 years ago, Tata Sky when came to India के अमीरों ने cable से उसको replace किया. But that population was very large to replace it with the cable. Cable was cheaper, Tata Sky was a little expensive. It was a better quality content. Now here the technology is giving you the ease of watching at your pace of time, right? TVs. So, but it is still at a very small minority. Even the cost of the bandwidth, which has slided about almost 200% in last 4 years, it is not going to slide any further. And if it is not going to slide any further, the cost of watching the content would be only privileged to 1% of the 1% population of India. So while connected TV has still not grown to that level, that 1% of the 1% population of India, it is likely to deliver the content, and more content is available to a large number of people. Cable, DTH will continue to serve to the audience at a far cheaper price, because finally the cost of the bandwidth is still very high as compared to what the cable operators or the broadcasters are charging put together. So as long as that ecosystem balances out, I think the both will have its own audience. But yes, India's rich and famous is like Rob Report versus Outlook or India Today magazine. India Today magazine would also be consumed. People rich and famous will consume both Rob Report and India Today, but large part of the population will still consume India. That's the way it is going to be.
Absolutely. There is a market, like India is a market where everything will coexist and grow together. Yes. Absolutely. With that, gentlemen, thank you so much for joining us on this roundtable. Vikram sir, Shashi sir, Avinash sir, thank you so much for joining us. Thank you. It's been a real pleasure. Thank you. Thank you so much. Thank you.
Thank you.
Bye. Have a good day. Thank you.